The following is a presentation of TFNN.
'Let's go to Ilka in Boston. Ilka, thanks for calling. Thanks for holding.
How are you?
I'm doing wonderful.
Steve, seriously, you guys are unbelievable. You are doing wonders for all the traders.
Well, thanks. We appreciate that.
The Trader's Edge. Now, Steve Rhodes.
Good day, money masters and treasure hunters. Welcome to the magnificent Monday, August 4th edition of today's Opening Bell on the Trader's Edge. I'm your host, Steve Rhodes, author of Mastering Probability, the daily newsletter service that is the intelligence for creating financial freedom. Hope everyone out there had a fantastic weekend. Let's make sure that you and I, that we do all that we can do to have a magnificent week. And let's start it off by having a magical Monday. Now, our call-in number here is 877-927-6648. That means you can give us a call. It's an interactive show. Happy to take a look at your stock chart, try to answer any question that we possibly can. And welcome to all of our new viewers, all of our new listeners that are watching us via eSignal version 12. That's right. You can watch us live as one of the windows in your charting services out there. And welcome to the Hotel California. We call TFNN the Hotel California. Our check-in time now is at 8 a.m. Our man John Logan kicks off the morning for us each and every day, doing a show called the Global Market Pulse. Nice show again this morning, John. We run for 10 hours, 10 hours of live, interactive market analysis. That means as the markets change, so may our calls as well. But that doesn't mean that you can't call in. You can. 877-927-6648. Again, would be glad to hear from you. See what we can do here. And so my outcome here in the next couple hours, I'm with you for the next 2 hours, is to be able to teach you some different patterns. A to B equals CD patterns. We'll take a look at Fibonacci expansions and retracements because the markets are always retracing or expanding. Of course, they can trade sideways, so we certainly look at consolidation patterns, look for breakouts of those as well. They help us to identify what we call measured moves. You see, when you break out of a sideways market, you're likely to move equal to or greater than that sideways consolidation that it has been traveling in. Well, let's go kick off our day. It is Magical Monday. This is Tiger Financial News Network. I'm Steve Rhodes, and welcome to the show. Right now, Dow Futures, they're trading up 34 points out at 16,450. S&P Futures up 5 1/4. They're trading at 1923.75. NASDAQ up 11 points right now, trading out at 38.84. Russell 2000 up 5 points. She's trading out at 11.17. King Dollar up 4 pennies, trading at 81.42. Gold is flat, trading out at 12.94. Silver is flat as well. It's trading out at $20.41. Light sweet crude back 23 pennies right now at 97.64. A quick peek across the globe. Let's go see what's going on over in Europe this morning here. We'll take a look at the DAX and the FTSE. The DAX has now just turned slightly positive, up 97 cents. The FTSE up 32 points. That's interesting, up about 0.5%. In Asia last night, a little bit of a mixed bag. The Nikkei down 48 points, and that's about 0.3% out there. Making up for that 0.3% was the Hang Seng. That was up 67 points, and the Shanghai up nearly 2%. 1 3/4% up, 39 points, finishing out its trading session at 23.28. Okay. Where do we begin today? Well, first, actually, what's moving in the market here, pre-market? You've got Pike Corp, P-I-K-E. Used to do a lot of pike fishing up in northern Michigan. They closed at $7.96. They're trading out at $11.83, right? 83 cents right now. Let me see here. What's the deal? Transactional by Court Square Capital Partners. So it looks like this thing is being bought out by who? Court Square Capital Partners. In any event, that's trading the upside here. We've got Mobile I, MBLI. That closed at $37. It's trading at $40 right now. You've got Tech Mira Pharmaceuticals, TKMR. That closed at $14.26 on Friday. It's trading out right now at, I can't tell you what it's trading. There we go. populated, 1564. INSMED, INSM, there's a ticker symbol. That closed at 17 and a quarter. That's trading a little bit lower this morning. And that's trading out about 12.69. All right, so let's take a look at where we're at. Let's take a look at both the weekly, the daily, and so forth. Let's start off by taking a look at the S&P futures. What do we know right now? Well, you're looking at if you're watching us on TigerTV, and I hope that you are. Of course, if you're watching us inside of eSignal, you're watching us on Tiger TV. If you're listening on the radio or your mobile device at TFNN.mobi, don't forget you can watch this show. It streams live to your mobile device. Just simply go over to the homepage of TFNN.com. Upper right-hand side, you'll see a button, 3 little smartphones on it. Click live. You'll see this show stream live to you. And, of course, you can get the archive of the show on Channel 9 on the homepage, off the homepage of TFNN.com. Now, we take a look at the daily chart for the S&P futures. We can see that back on the trading session here, July 24th, little doji candle was making higher highs with less relative strength. Never a good thing. Never a good thing when it's followed up with a reversal signal. And that's what really took place on July 25th. 3 candle formation out here referred to as a evening star. Price went ahead and moved lower, obviously, over the next couple of days, sort of. But, boy, the air fell out of the tank. And that was on the trading session of July 31st. That was a very bad trading session on July 31st because it impacted the weekly charts, impacted the monthly, well, it really impacted the monthly charts. Now, where are we at right now? If we take a look at the signals out here, you're going to see maybe what looks like a little bit of a green box out here. Let me just refresh the screen here. Reload this. There we go. Okay. So I want to show you here. You're going to get a little bit of Friday's session is an important session here. Why is that? These little green signals here at the bottom is what I refer to as the Rhodes Momentum trading signals out here. And in this case here, if you were to see a close today above Friday's high, by the way, that high is 1932.25. It's a daily chart, so it doesn't mean an intraday spike. It means an actual close above it. Actually starts to turn into a buying opportunity. Now, also on the charts here, you see some resistance, the old support level of the daily chart for the ES Mini, that 1940 level. So price would really need to get back above that. So not just close above the high from Friday. Again, that level 1932.25, but 1940.45. Bumping into what is old support, which could become new resistance out here, is what would really give us a signal as to whether or not this is more than just a counter-trend rally. Of course, we're not there just yet. So the counter-trend rally on a daily chart, that doesn't occur until you really get above the high of Friday's session out there. So that's what's going on a weekly basis. You can see right now you're in the red zone. And we do have NFL season coming upon us, right? And college football, even better than that. So we are in the red zone. Now, that's on the daily chart out here. Let me put the weekly chart. I may have to switch to the continuous. No, I don't have to switch to the continuous. So inside the weekly chart here for the ES Mini, what you're really in is just what's called the cautionary zone. Now, last week, we formed a little green signal on the daily chart. And on the weekly chart, what we also formed was one of those green signals as well. Now, the cool thing about this is that if you take a look at the last time that we formed one of these green signals, that's really just a normal, natural movement, part of the EKG of the marketplace out here. And so you want to be looking for those signals on the weekly charts because they help us to identify, again, if a change in trend is taking place, we won't see it close above last week's high. So on the weekly chart out here, the high out there is 1979.50. If, in fact, you were to see a close above 1979.50, I don't care how bearish many of the things are that we can take a look at. If you see a close above that, here's what I can tell you. That's a buying opportunity for intermediate term capital out there. I don't know what the market is going to do, no more than you do. What we can do is we can identify areas inside our charts to help us navigate the patterns out here. Likewise, if that high from last week, 1979.50, acts as a larger term resistance area, then you're looking, and then you see a close below last week's low. Then on the weekly basis, we can absolutely say that the change in trend has taken place. Again, this is on the S&P futures contract. That's on the weekly. That was on the daily. And, of course, what we are concerned about here, we put the monthly on the chart. It may be the monthly. I've got to use the continuous, but let's see out here. what the data will pop up on the screen. The monthly chart here for the S&P futures, just like inside the New York Stock Exchange, no, monthly chart was not bad. So on the monthly chart, it wasn't the S&P. The monthly chart for the S&P, let me put the continuous up just to make sure that I've got all of the data. But I don't think that give me a moment here. I don't think that it is the S&P that's given us no, I take that back. So we did get that's why I wanted to put the continuous up here. Yeah, the Rose momentum trading strategy just simply needs more data in order to be able to properly calculate. So on a monthly basis, still really not all that much damage. We are making higher highs. It made higher high in the month of July. It did it with less relative strength out there. Slightly less relative strength, but we did not get a reversal signal inside the S&P 500, inside of the ES Mini out there. And so, therefore, it's still in full-blown bullish mode. I mean, that's really what the monthly chart is telling us as we speak right now. Now, we always have to remember that changes in trends are going to take place first on a shorter-term time frame chart. That could be your 120-minute time frame, then to your daily, then to your weekly, then to your monthly out here. And that's why we really take a look at this. I mentioned last week on Friday out here, got a few emails, a little bit of hate mail, if you will, from folks because I was telling you that, hey, it's all about the Qs. And I said it so many times out there, and that seemed to irk a few people. You know, folks, I can't tell you anything more than call it like it is. And if we take a look at the NASDAQ on a monthly chart out here, the NASDAQ just simply making higher highs, doing it on slightly less relative strength on a monthly basis, but no bearish candle in sight out here. So it really is going to be all about the Qs because the Qs will be able to go ahead and either pull these markets higher or just simply help them to tank much further. And I can tell you, in looking at a monthly chart out here, I would be hard-pressed to tell you that it's time to get out of the Qs, to get out of the NQ out here from a long-term standpoint. So if you're managing your 401k accounts, which accounts for about 70% of you, and you are tied to the Qs out here, my message is absolutely not to sell. My message is always to make sure that you've got a stop in place. Now, from a longer-term stop standpoint, where should that be? You know, it's probably 8-10% below the highs of last month out there. Inside of the Qs out here, inside of the NQ, that gives you a price level of 39.91. So what, 40 points below that is in the 39. You don't want to do that. You're already below that. And I'm not going to help you manage longer-term accounts right here, but what I can tell you is from a longer-term standpoint, that's still in full bullish mode out there. If we switch over and we take a look at the daily chart, the weekly chart, let's take a look at the weekly chart. Let's see what kind of damage was done out here. You know, it did give you a bear sash candle, so that is a reversal signal. And that says that you've got some resistance out here, and that resistance out here is up at the 39.83 levels. You get above that, and there really is no resistance inside of the NQ, still in strong bullish mode. Daily chart, in a little bit different story out here. We've got a little bit of weakness out there, and when we get back, we'll take a look. But it never busted down, never got below our TAS market profile low out there. In fact, it's really just acted as support. 877-927-6648. We'll be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Before the bell, we had Michael Kors. Let's see what we can find about their results out here. For revenue, they posted, looks like about $950 million. Where is it? They should give me the exact number out here. Well, their net income, I can give you their net income figure. Net income was $187 million versus $125, so nice job there. And for their first quarter, the retail sales were up 47% out there. So that is some pretty nice numbers. Now, even with those numbers out there, what we can take a look at is what's going on in the pre-market here, and it's trading down. So closed at 81.83. It's trading out at 78.80. So let's go see where things are trading into. So it's 78.80. This thing had gapped down here a couple of, in the middle of July, 17 million shares on July 15th. And as it moved down, the volume behind that, again, 17 million shares. The low was made the following day, and that was at 77.75. So if that low holds, this morning here, what we can see is a clear resistance level, and that was where Michael Kors had moved down. That's that July 14th low. That's the gap down, the prior day of the gap down, and that's at a price point of 85.34. So it's got some pretty stiff resistance at that 85.34 level. It's already made a 1 to 1.272 A to B equals CD to the downside. That price projection, by the way, that was at the 79.46 level. We saw that area get rejected. That was on July 16th as prices moved down to 77.75 and worked off the lows. Now, what Michael Kors was also doing back then was moving right down. So it was completing an A to B equals CD pattern right into a sign of strength. That sign of strength inside Kors, KORS, took place on the trading session of February the 4th out there with 23 million shares to the upside. So it was actually pulling back on lighter volume. Now, your preference here in pulling back on lighter volume is not to gap into it with an expanded volume session. And that's really what took place on July 15th. So Michael Kors, when you take a look at it technically from a stock chart standpoint here, what it really would need to see, and today would be it with it being an earnings release day, would be some kind of sign of strength off of the bottom out here. And that sign of strength would say that it would close above at least $85.34 out there. If this area fails inside of Kors, we try to pull this back and take a look at any other kind of high volume bars out here. There's also another breakout that supported that breakout session from February 4th. There was a wide-ranging volume day, but not a wide-ranging bar, and that was on November the 12th out there. That's 41 million shares. So it really should have pretty good support in the area where it's trading at right now. If it breaks that level, let's take a look at a weekly chart here for Michael Kors. That's the monthly chart. Let me go back and take a look at the weekly chart, see if there's anything that sticks out at us. And when I say sticks out at us, we're trying to identify some kind of high-volume bar where it would be trading below. So you can see that nice breakout session here again on the weekly chart as well, February 3rd. You can see how that breakout session weekly was 48 million, and the pullback here was 45 million. So a little bit, maybe Michael Kors here, if he could hold these lows, would be in a consolidation-oriented pattern out here, and we wouldn't know until we would see price get back up to the February 24th level. But if this area fails, then Michael Kors is probably headed back to the February 2013 area in about the 56 to 64 level. KORS is the ticker symbol. Also moving in the pre-market out here, let's take a look at Twitter, see what it's doing. TWTR is a ticker symbol, trading at 44.13. It's trading down just slightly out at 43.73, so nothing big there. Let me see, what do we have? The upside here this morning, you've got Apple. I think John Logan was touching on Apple here just briefly, but nonetheless, close at 96.13. It's trading up just a few pennies at 96.50 as we speak right now. Let's see what's going on inside the currency market out here. Let's go see what's going on with the Euro-US dollar. Here's the daily chart for the Euro-US dollar. And this chart here suggests, it broke a little consolidation pattern. If you're watching this on Tiger TV, that's the yellow area. And that yellow area out here, it broke through that level. When you break a consolidation, in this case here, the Euro-US dollar says that it should move down over time into the 130-ish area. And that would be the equivalent of the actual consolidation. Now, you've also got a 1-to-1 A to B equals CD at the 132.1.307 is your 1 to 1.272 pattern on the way down. Right now, we've got, as far as the futures market is concerned, we've got the Dow futures up 31, S&P up 4.5, NASDAQ futures up 10. We get back from this break, let's go see how these markets have popped and whether or not they're going to drop. 877-927-6648. This is Steve Rhodes. This is TFNN. We'll be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization execution capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
To the races. We got the Dow up 6 points, trading out at 16,500. S&P up 2.5, traded 1927. NASDAQ Composite up 11 points, traded 4364. Russell 2000 up about 3.5 points right now. New York Stock Exchange up 16. Gold off about $1 right now. Silver up 24, about 2 pennies, not 24 cents, 2 pennies. Light sweet crude back 10 cents out there. Okay, so let's see here. Got a question inside our Tigers Den. You know, folks, if you are new to TFNN, even if you're not new to TFNN, and you haven't had a chance to check out our Tigers Den, do yourself a favor and do so. You know, each of us, whenever we're trying to improve our game, doesn't matter whether it's a game of golf, a game of tennis, a game of volleyball, a game of the numbers game out here, the financial game, what you want to do is go ahead and make sure that you elevate yourself by increasing your peer group. You know, it's always easier to learn how to play golf better if you play with better golfers. You just get to watch and observe what it is they do, and that way you can modify your rituals to include some of theirs as well. That's what we really have here inside our Tiger's Den. So you can test drive that for 30 days, just as you can my newsletter service, Mastering Probability. So go over to the homepage at TFNN.com and give both of those a shot. Now, inside our Tiger's Den, there's a question for me to take a look at STAG, S-T-A-G. So let's go take a look at this and honor that request. And first, let's find out what the stag is out there, because, you know, no, we're not talking about a stag, a party, S-T-A-G. At least I don't think that we are. And let's go see what this is. So this is Stag Industrials out here. Let me see what they actually do. Stag is a real estate investment trust. Okay. So now let's go take a look at the equity. And it looks like the question is, if you owned, would you sell some or just hold? So that is the question inside the Tiger's Den. So as we take a look at the STAG, Stag, it's trading out right now at $22.56 out here. So the very first thing that we want to do out here, and this is how I would answer the question, what I'm going to do is I'm also going to go ahead and turn a couple of elements off this chart, because we can come back here and we can add some things. So let's go ahead. I'll get rid of some moving averages. We'll get rid of our TAS market profiles out there. And what we're going to leave on the chart out here, we're going to leave really two things. This is what I like to do, is just simply take a look at the chart along with volume, and I also like to understand where we at when we take a look at a relative strength or relative weakness out here. So in this case, the very first thing I like to do is go identify where are the volume bars and where are we trading in relationship to them. Now, the first volume bar, and this way we don't really care what the actual instrument is that we're looking at, because this is uniform across the board, with the exception of currencies. When you're trading the currency pair out there, you don't really have volume. Or if volumes show up on your chart, turn them off, because they're really immaterial, because they're inaccurate. They're not really reflective of what's going on in all the commercial banks worldwide. You can go ahead, if you're trading the futures contracts, go ahead and leave them on there. But here, what you really want to do when you're taking a look at an ETF, when you're taking a look at a stock itself, you want to go ahead and keep those things turned on. And where are we trading to? Now, the first thing that you notice, I always go to the highest volume bar that I can see and say, hey, what's going on there? In the case of Stag, S-T-A-G, what you'll see is the trading session of April 23rd at 2.3 million shares to the downside. And it was also some volume off of the highs. It's never a good thing out there. We're trading below that right now. If I go take a look at the next volume bar, why is volume important? It's really identifiable areas of where you had a number of individual shareholders, funds, however you take a look at it, either come in or come out of an equity. It should be either hold as a support level and help to identify where something broke out or where something broke down. That first thing that we looked at was where the stock actually had broken down. If you take a look at the trading session on March 19th, it too traded to the downside. It was not a gap down, wasn't volume off the highs, but was 1.9 million shares, and it's trading below that level right now. So the first answer, as we take a look at understanding what Stag is doing, it's trading below an area of supply out there. That's the first level. I don't see any other high volume bars as I take this back into the October, September 2013 level. So we're almost back a full year as we take a look at this chart out here. And that's plenty good for me. What we can also see, what else can we see out here on this chart? You can see that it's in the oversold condition out here. In the oversold condition, we're helping to utilize the relative strength indicator as one of the indications that is the case. And it's trading right now at 28.74. Anything below 30 starts to get into oversold. Anything above 70, utilize that indicator, which we're using over a 14-day period, 14 bar, really what I should say, because I use this as a 14 bar, whether I'm using an intraday chart or I'm using a daily chart. So we're into an area where it is oversold. It says that, maybe you're going to get some kind of a bounce out of this level. You can see the last time that the oversold conditions took place inside of STAG takes you back to December of 2013. You can see how price moved out of that area. So by answer to the question, if I owned it, would I sell it? No, I would make sure that I have a stop in it. So no matter what, when you are trading and investing, either way, just make sure you have an identified stop. And that stop is best placed prior to entering the order because it is at the point in time when you are most objective about the market. Now, let's come back here and let's add a couple of things. And let's go ahead and add our TAS signal boxes out here. So let's take a look at the market profiles. On a daily basis, this says, hey, not a good sign because you're well below its market profile low out there at $23.85. Now I'm going to switch over to the weekly time frame and just see where we're at weekly as well as monthly, just to help our Denner out there and understand where some, and also on a weekly basis, you're in an area where it says, hey, it says, John Logan likes to say, it's not okay to be long. It is okay to be short out there. And again, if we take a look at the monthly, so that way we cover 3 different time frames, because I don't know what the time frame is that our Denner is taking a look at this trade. We'll see if the market profiles pop up on the screen out here. There we go. So the market profile lows on a monthly basis, say any close this month below 22.23, and you'd have confirmation on 3 different time frames that it is the sellers who have control out there. So your stop really ought to be somewhere below that 22.23 level. And I don't mean right there like 22.22, but use some based on where you're at. If you're above water, underwater, what the time period trade is that you're looking at, utilize those as some of your tools out there. So the question is, should it be long? Would you sell it? Just hold it? I would, again, want to go back and take a look at what your time frame is and really utilize that. But always make sure that you've got a stop in place no matter what it is that you are trading, no matter what time frame it is that you are trading. You always live to see another day. That was on Stag. I hope that helps our Denner out there. If we take a look at things that are moving in the markets here this morning, to the upside, you've got Tesla. So let's go take a look at Tesla, see what it is doing. TSLA is the ticker symbol. It's trading out at 236.20. It's still in bullish mode. If we take a look at its moving averages out here, the little pink line and white line, if you're watching this on TigerTV, it's up $2.89 right now. Now, Tesla, in order to really get bullish, so you've got this nice little wide box that it is trading in, so a pretty good consolidation range. That gives you a place to both buy it from the long side as well as an area to sell it from the short side and play the entire box out here. And you can see that, and we take a look at the entire box, the bottom of that box is the 174.74 range. It didn't get down there on the, this is a weekly chart, by the way, that we're looking at, so it's a very large box. I'll switch over to the daily chart out here. It's a very wide box. Let me go ahead and expand that up on the screen out here. Makes it a little bit easier for you. So on the weekly chart, says that Tesla should have some pretty good resistance at the 265 level. Anything above that on a weekly basis, and that moves into full-out blown bullish mode. But what we know is that this also has a high volume monthly high that has not, a weekly high, I should say, that has not been tested. That's the week ended here of February 24th out there. That says that the high ought to be tested inside of Tesla, and that's at 265 even Steven. Any close above that, with more than 98 million shares, you'll be setting up an A to B equals CD to the upside inside of Tesla. But we'll take this one day at a time, a moment at a time. Speaking of moment at a time, let's go back and take a look at the daily chart out here. If we take a look at the daily chart is in full-blown bullish mode out there. It's above its market profile high. It did that even in the case of Friday. So this momentum stock still has a little bit of sexiness left on it with regard to the bulls out here, because even with the market moving lower last week on Thursday, last week on Friday, Tesla was not damaged. And in fact, if anything, on Friday, it gave you a bit of a bullish signal. Now, how bullish? Well, what Tesla is doing here, you can see where the support is inside of Tesla as we take a look at the volume bars. Let me just do a little scrunching here. You'll see those volume bars stick out. And these are the volume bars from the trading sessions of June 6th and June 17th out there. And so you can see that those funds, they're still inside of Tesla supporting the stock. On a daily basis out here, it's the June 30th level that we want to watch. That June 30th price point high is 240. 244.49. 4.8 million shares. Now, the low of that, which it probably will go ahead and hit and attack today, the low of that's 239. So moving into it with more than 4.4 million shares suggests that at least the top of that will get tested. It's done 676,000 shares right now. If it takes that out, it's going to set up an A to B equals C to the upside. That's that lightning bolt pattern. There's a couple of them out here that we can look at. Let's be conservative in these markets out here. The conservative says that our A point is down here on the trading session of June the 11th. And that's out at a low of 199.25. So your 1-to-1 A to B equals C to the upside. If, in fact, it takes out 244.49, says your 258.84 to 271 area is likely what would come into play. That is on Tesla. TSLA is the ticker symbol. Let's take a look at what else is moving in the markets here this morning. You've got Zillow to the upside. Z is the ticker symbol out here. As we take a look at Zillow, this is the daily chart. It's trading out at about 146.78. On its daily chart, it just really created new market profiles. But Zillow has a nice little breakout session here. So price has pulled back on Friday. What price did was it pulled back into the sign of strength. So Zillow had a very nice sign of strength a couple of days. So it's got a high volume high as well on its daily chart. Must be a high volume high on the weekly chart as well. Untested, that is for sure. That took place out here on Wednesday. So that was on July. Well, no, it wasn't Wednesday. It was July 28th. Whatever day July 28th was, there was 8.7 million shares to the upside. That was some follow-through from the trading session of July 24th that had 7.7 million shares the following day with 4 million shares. So Zillow looks pretty darn bullish out here. I believe that was Zillow bought out or Zillow bought somebody else out? I think it was Zillow bought one of the real estate, one of the internet real estate entities out there. So Zillow, if Zillow can take out the high from the trading session here of July 28th, it ought to at least go back and test it. So Zillow ought to head back to the 164.90 level. It's found some pretty good support at its most recent market profile low. As long as it can hold that area, then Zillow ought to go back and test those highs. That market profile area looks like it's probably about the 144.13 level out there. If we take a look here at what else do we have moving to? Let's take a look at some things moving to the downside out here. Moving to the downside, leading the charge, and that's going to be Noble Corp PLC. NE is the ticker symbol. Let me see what kind of news we have off out here. So Noble Corp completes a spinoff of Paragon Offshore. So it's a spinoff. Let's not spend any time there. Let's take a look at Insmed, INSM, is the ticker symbol out here. That's trading. It's down 24% out here. So it looks like Insmed provides regulatory update for Eric Kaisi filing, marketing. Let me see. What the heck is this? Say a drug thing, I would believe. Insmed. Let me see if I've got any more. So Insmed today announced following discussions with European regulator authorities intends to file by the end of 2014 a marketing authorization application with the European Medicines Agency. So anyway, what does that mean? I don't know. But what I do know is that this stock has pulled back. Let's take a look where it's pulled back into a sign of strength. It's gapped down. This is not how you want to pull back into a sign of strength, folks. If you take a look at the trading session on this equity, June 18th, moved higher with good volume, 12 million shares behind that move. Made higher highs with lighter volume. That wasn't so much a big problem, with the exception of the fact that it was moving into a swing point that it was testing that had 716,000 shares. It was moving in there with 700,000 shares, about the equivalent from a volume standpoint. The problem with this equity, if it starts to break below its most recent sign of strength. So the level of demarcation for this to move much lower would be taken out, in my opinion, the June 3rd lows. That's out at $11.82. Right now it's trading out at $13. But gapping down like this, not a good thing. This could be setting up a consolidation range at best as we speak right now. That's on Insmed out here. So right now, if we take a look at the markets themselves, you've got the Dow is up 11. So we've got really flattish type markets. The Dow's up 11. S&P is up 3. Composite is up 16. Russell 2000 up about 250. NDX up about 15 points right now, and the New York Stock Exchange up 11. No way for the bulls to really take charge of the New York Stock Exchange today. They need something like 4,600 net advance in issues, and there aren't that many traded issues for all of them to even be able to turn positive out there. So the bears still have control of the ball as we speak at the moment on the daily charts. 877-927-6648. Steve Rhodes, TFNN. We'll be right back.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Welcome Welcome back, folks. Dow's up 25. S&P is up 5 right now. And let's go to John in Philly. John, thanks for calling. Thanks for holding. How you doing today?
Very good, Steve. Thanks for taking the call.
My pleasure. You had some questions about the NDX, I believe.
Yes, I did, Steve. In regard to the U.S. stock indices, I will share with you, I feel fairly fortunate that my attempts at looking for the completion of that rally began back in April.
Yes.
When I began speculating completion of the rally phase the third and fourth week of July. I feel fortunate that idea, that speculation has bared fruit. And now after we fell, decisively on Thursday and Friday, I make the observation that during the decline, the NASDAQ 100 group of stocks were much less weak than, say, Dow stocks or NYSE stocks.
In a big
way. And I'm wondering if you can pull up the NASDAQ 100 daily and weekly charts, and if you could just share with us your thoughts as to trying to answer this question. If NDX dips further, where, based upon daily and or weekly charts, where a low-risk buy might set up price-wise?
Well, what I'll do here is, John, so great question, and what I'll do for our viewers, since more folks probably take a look at the QQQ ETF, is I'll pull that up on my screen, and I will start off with the Qs. And as we take a look at that, what you just pointed out is, and people need to understand, and then Friday when I was doing the show, I said it's really going to be all about the NASDAQ here. And the point that I was making is if we take a look at just simply coming off of the April 15th low inside of the QQQ all the way to the high that was put in here on July 24th, there has been virtually no damage done, even with Thursday and Friday's selling. Some damage, yes. How do I say no damage? Well, if you just simply take a look at a trend line off of April 15th's low, and we can use several touch points along the way. You can use the low of May 19th, the low of May 7th. Price pulled right back into that trend. So the trend in the QQQ is still in place. And that's a short-term trend, by the way. And what took place, John, on Friday was one of those high-volume days inside the Qs. And the Qs have this unusual price behavior pattern, which is that they make lows with high volume. And you had enough take place on Friday. So the first question that you asked was, if this area fails, where is your spot for a buy? And I would have to say it's the dead cat bounce. It's a 0.382 retracement level of 92.07. But the reality is the message that actually we got inside the Qs on Friday was that right here, right now, is your low-risk trade, because your stop is simply going to be a close below the 94.04 level, the low here of Friday out there. So the market, the Qs specifically, are the strong indice. And if somebody was taking a look at something to buy, this would be it on its chart pattern. I would also state that in this case here, getting above the market profile high on the 120-minute chart, which is $3900.75 right now, and that's in the NQ, that would be your signal that what I just said is likely to come fruition, that Friday was at least an intermediate term low out there. So I hope that helps you out.
Steve, I do appreciate that. I just, in addition, share just a following observation. We're currently 95 on the Qs, and I'm taking a look at that March high down at 91. If it got down there, I would think that would be a good buy support area.
Absolutely. Hey, John, thanks for calling, folks. Thanks so much for joining with us this morning out here. Stay tuned. The Money Masters show is up next. Drop to start your day. Have a magnificent Monday. Thanks, folks.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
You're watching Tiger TV.